two key subsidiaries of Coal India, that's BCCL and CMPDIL, are gearing up for their D-Street debut, likely by December. Now, sources tell NDTV Profit that discussions on pricing are in advanced stages. My colleague Shrimi joins in with the exclusive details. Shrimi, what are you picking up? Because Coal India will be announcing its results today as well, so probably some commentary that could be expected.
Yeah, that's right. What we are picking up that the government is accelerating plans to bring two of the Coal India Ltd key subsidiary Bharat Coking Coal and CMPDIL to the stock markets, with both expected to make their Dalal Street debut by December. Now, according to sources, the listing process has been expedited with consultation over floor price and over offer for price, etc. now at advanced stages. Both IPOs are expected to be fully offer for sale, through which Coal India is expected to offload part of its stake as part of their disinvestment and value unlocking strategy. Now, if you remember, DIPAM, which handles government privatization and disinvestment plan, had already given note to Coal India to sell up to 25% equity in each subsidiary. However, the entire stake may not be offered in the single tranche. The sense we are getting that the sale will be carried out in 2 to 3 phases depending on the market condition and investor appetite. And in fact, Bharat Coking, essentially engaged in the mining and supply of coking coal, which are crucial input for steel and power sector. CMPDIL, which is Coal India Consultancy Exploration Arm, both have filed the DRHP with SEBI somewhere in May and June. Now, both listing expected to, of course, broaden investor participation in coal sector, unlock value for Coal India diversified portfolio. But more importantly, as things stand, if this two IPO, come in the given timeline, could be a major milestone in the government overall PSU disinvestment drive, especially when the government is getting sense and already stepped up plan to offload stake in a handful of PSU as global uncertainty eases, market sentiments improve, particularly amid a more stable outlook on the tariff, and that's what sense we are getting, and very crucial for the remaining part of the current financial year.
Thank you so much for that, Shrimi. This is going to be interesting because, as we mentioned, Coal India will be reporting numbers today as well. In fact, let me get in Mayuresh to weigh in on this one. Mayuresh, Coal India reports numbers today. Secondly, Shrimi has this exclusive source-based story where they will be announcing the listing of the subsidiaries as well soon. What do you make of this one?
Morning, Hiral. No, I think the subsidiary unlock value might actually play out for Coal India if that probably happens. But as far as the core business is concerned, the expectations in terms of higher offtake, at least in the second half, seems to be a very plausible outcome. At the same time, the expectations in terms of the conveyor belts and the railway lines becoming operational will mean that they might be able to extract more and probably supply more to the market. So both in terms of production as well as sales numbers, in terms of output, numbers should be relatively better. In terms of pricing, I think it should be a relatively stable pricing environment as we head into the second half and the next year as well. And therefore, I think numbers should be relatively on the stable side. The subsidiary listings obviously add value in terms of value unlock.